What's going on, guys? Good morning. Welcome into another live stream here on a Wednesday. Hope you are doing okay. Wanted to just come by and give you guys a couple updates. So let's get this on the road. So SPX continues with the melt up that we've been talking about for the past couple of streams. Obviously, we have had some very nominal pullbacks. The overall uptrend is still intact, obviously, and if you look at just how stretched out we are now, on the daily, you can see that we're pretty stretched out in terms of the 50 moving average, kind of, being very far away from these candles at the moment. So obviously at some point down the road, we will see some price correction downward, but our target of 5,300 on SPX is still pretty intact in terms of where we're seeing the market go to in the near medium term. Now, the market is currently still on a fear of melt up mode. I think there are pockets of the market that are overstretched, of course, but I think that market participants are more fearful of losing out on upside than worrying about downside. And this is just what the options market suggests so far. There has not been broad coverage of hedges. There have not been very much interest in taking out the money hedges just yet, as you can see from the VIX index, right, which is still firmly at the 13-14 level and has not really been able to see any rallies or moves to the upside. And more importantly now, there is still the very strong conviction for risky assets, which is adding to the market's already egregious appetite. So where we are currently is no change from where we were last week in terms of where we see most of the data. Now, inflation did come in, but it looks like the market just kind of shrugged it off a little bit. And that's a pathway in terms of the market just understanding or believing that the symmetry of the Fed's decision is going to be largely dependent on continued revision of data. Okay. In fact, right now, I believe that the market sees the Fed's loose policy as a sign to continue the willingness to let inflation stall above its target, but yet still cut rates a couple of times in the second half of this year. Okay. And this gives them a low inflation fighting credibility at this stage, which with US financial conditions actually may be easier than when the Fed began its hiking cycle, right? During this period of time here, right? All the way here. So as of right now, the expectations of the market are such that if there is a shock to the Fed's decision, then the market may react unfavorably. But right now, it seems like we're kind of just chugging along still in terms of the move higher. Now today you have a 30-year bond auction, the 30-year Treasury bond auction. That will be an important event that will happen later today. The NASDAQ is something that I want to point your attention to, and then I'm going to dive into China a little bit. If you look at the NASDAQ on a 4-hour chart, not the daily chart, you'll see the potential signs of a distribution going on, right? So you've had a kind of a uptrend here, and now this uptrend is curving a little sideways. In other words, forming the top part of a potential curve downwards, right? Because you don't have the NASDAQ breaking into new highs. You're kind of seeing a top out on this day here, which was the 7th, 8th of March. And then you have the NASDAQ kind of not being able to get back to those highs during yesterday's session or Monday's session, Tuesday's session. And if the NASDAQ continues to be weak here, then there is likely to be a slide and attempt to break 17,882. Okay, So that's what I'm looking at in terms of where this market is. Now remember, SPX is a great gauge of the entire market, but you need to look at NASDAQ for clues on where the market will continue to accumulate momentum. Okay. On top of that, you've seen semis have been running extremely hot and then have been having some snap pullbacks as of late, right? So whenever you see, well, how would I put it, market manipulation to some degree like that, which I wouldn't really consider it like super market manipulation, but whenever you see that occurring, you have to be aware that there may be a move coming for a potential pullback, right? And you don't have to make it your base case, and you don't have to over exaggerate. You don't have to use all your emotions at once. Don't let yourself come to the point where you're like so biased where you're like, oh, market's gonna go bearish here. And you also shouldn't have the bias where the market's gonna go higher. You should be having a neutral bias and being able to play both sides of this without putting yourself in a situation where you price yourself out. Okay, so my point is flow like water. Don't box yourself in with a bias, and that way you will never let yourself down in terms of expectations. Now IWM, it broke last week and tried to chug higher and then failed at around 209. This was a key level for us to grab some liquidity for upside shorts that were trying to get exposure. And then at the same time, now at around the 198 level or 201 level, we will see the new liquidity, fresh liquidity. We'll need to grab more of that in that area. Okay, so coming down here is crucial for us to bounce in the 201, 202 or the 198, 199. Okay, in order for us to find more upside in this scenario. Okay, so just to make it very clear, this pullback here is a decent opportunity to still hold long positions until and unless something tells us otherwise. Now, on the other end of things, the US 10-year yield, after falling for a couple of sessions from, 27, 28 February, all the way to March first week, so you're talking about almost a week and a half of price action on US 10-year yields, is now kind of pulling back to the upside. And remember that the higher the US 10-year yield goes, this is going to put downward pressure on valuations of stocks, because majority of these stocks are valued in based on the US 10-year yields risk-free rate, right? And then on top of that, you have the dollar index, which has during the same period dropped quite a significant amount, which allowed the market to continue on its upside part here, right? And because of that, you'll have further upside pressure on the dollar index. And further upside pressure on the dollar index will also obviously put pressure on equities. So these two work hand in hand in predicting that if NASDAQ continues to be weak, then NASDAQ may enter into a short-term correction. Short-term correction, remember I said I didn't say crash. I didn't say we're going to die. I'm not over examining the fear and the likelihood that the market's going to pull back here. I'm talking about very nominal corrections up to 5%, okay, which is needed in a bull market like this, okay? And so that's where I'm at in terms of indices analysis. There's macro headwinds for short term in terms of 10-year yield and dollar index, feeding into a little bit of weakness into tech, and then the continued rally in SPX, which has been seeing obviously shorter or momentum, but these intraday pullbacks have been kind of vicious, right? So that's that in terms of the indices. Now, feast your eyes on China for the time being, because the markets here look like they are finding a temporary bottom, okay? And that doesn't mean that this is the bottom. I'm just saying it is a temporary bottom. If you look at GXC, which is the equivalent to the S&P 500 in China, you can see that this has been a key level of liquidity for this market, right? It's been a key level for this market. And we did find that now, I mentioned this to our group a couple of weeks back, that China has been looking increasingly capitulated. In other words, it seems like it's running out of sellers at the moment, And if it's running out of sellers and buyers step in, what does that do? Can anyone tell me what happens when there are no more sellers and buyers step into a financial instrument? On top of that, have a look at KWeb, which didn't go as low as GXC did, but still had a significant pullback in a very similar demand zone. Okay, a very similar demand zone. So this area where KWeb is testing now is actually your previous support. Okay, it's your previous support. You can see that it's support from 2015, and then before that 2013, and this area here has been support multiple times. Does that mean that we're going to go bullish on China and just take every single thing and trade it into oblivion? No, right? No, because you still need some confirmation. There's still a lot of upside here which we can tap on. But we need this to hold firmly above 27 and then eventually go up to hold above 29 in order to play some of this upside. Okay. Now, having said that, there are a handful of stocks that I like setups for. Okay. One of them is JD. Now, JD has been undervalued severely for a long, long time. Now, this is probably the best one among all of them because the rest of them, I'll get to it in a second why I don't think the rest are as good as this one. For one, this came and bounced off a very, very important demand zone, which has been holding true since December 14, August 15, February 16, June 16, November 18, December 18, and then now with a double bottom, right, here on January 2024 and March 2024 with massive volume, right? Above average, massive volume with back-to-back days, showing that there is a possibility that smart money has entered this specific market here, okay? So, I do like JD as a setup, but more importantly, it has to break above 29 and hold above 29 for me to start playing some of this upside. Okay, and there's a lot of upside, a lot of upside. So unless it starts breaking above 29 and holding above 29, you know, forming a base above 29, showing me that price action can be above that, I would be happy with that. But if not, then I will continually revise my opinions about this. Now, stock like Baidu, for example, also a decent opportunity, right? You can see on the weekly, this has been a very key level of demand. Now, remember, these are trades for people who are looking for position trades, right? This is not a thesis. The China thesis is not for someone who's looking short term. Yeah, if you're looking for a short term idea, this is not the one. Okay, you don't want to bet on China right now for a short term idea. So in other words, you don't want to be using options to bet on this like for 1 month out or 2 months out or something like that. I'm talking more 6 to 9 months, right? Because there's a real capability that when interest rates get cut, it's going to spill over into Chinese markets too, okay? Remember, when the US coughs, the whole world catches a flu. So when monetary policy expectations start to get better, then equity across the world is going to start recovering, and then expectations of China might also improve because there will be better lending infrastructure, okay? So you're looking for an extended period of time out. Now, BABA, I know this, everyone keeps talking about BABA, and this is one where individuals are just waiting to buy a dip on this one. But I don't see it yet. I don't see the base case to get long in this just yet. It has a lot of coverage to do and so many booby traps in this area, right? That this area is very messy. We need to break above this area in order to see that clear upside on BABA. So I personally don't like this setup. There was also Tencent, which has been decimated as of late. Another one with very decent opportunity came down into a very key level demand zone here, and then seeing some potential upside here. And then you had NEO. You remember, you know, this is so funny. I got to tell you guys this story. There was one of my friends who bought NEO at $40, like somewhere around here, right? and it rallied all the way to 68, and they had almost $50,000 in the stock, okay? And they were like, man, I'm up like 20-30%, you know, I feel like I should hold this further. And you know, as a good friend and as a good person, I told them, you should probably take some profits off it, right? And this person bought more at 64, right? And then sold everything at $12. And recently I asked them, I was like, hey, do you still have that position? They said no. And by the way, this is not a story to shame them, but it's just more like to explain to you guys the severity of loss aversion sometimes that occurs to people. It's real. It's really real. Some people, you know, if you liked it at 40 and 60, then wouldn't you buy more at $6 is my question, right? And what's stopping you from holding that equity? I mean, until and unless you're levered to your absolute wits, you should be holding the equity and just letting it play out, right? But no, I mean, that was a weird one. Like, you know, if you bought it at 40 and you had profits, you didn't take it at 60 with partial profits, then you kind of deserve to be in that bucket because, yes, you didn't know better, but you're also being greedy, right? So your loss aversion is what gets you in these scenarios because majority of the time, people aren't able to understand when their emotions are being taken for a ride. You have XPAV, this one I don't like so much. JD, PDD was the other one. This one's the stronger one across the lot, mainly because of AI integrations within their infrastructure. And this one's actually looking decent next after JD. So this is my second favorite setup after JD. Because on the daily, if it can obviously signal that this is a potential bottom, then I would like to go long somewhere above 139 or 140, somewhere here. So we need to break firmly above this and start building a base here in order for me to take some upside. So still a long way to go on PDD. But alternatively, you could go risk off around 107, 106, and then play the upside all the way to 156, which would give you a really decent risk to reward ratio here. You'll be risking roughly about $20-some to make about $40-ish, which is about a 1:2 risk to reward ratio, which is not terrible in this area, but it'll be a long swing. Okay, so that's China. Now, in terms of their local, you know, market, etc., how the CCP runs the country like a business, I'm not going to jump into that because too many variables, too many decisions, and CCP is very independent. So we don't really need to dive into that so much. I'm more focused on how the US market will influence the Chinese market later on than I am focused on what's actually happening in the Chinese market. However, I will say that the equity risk premiums, which are the excess risk that you take on for excess returns in equities, is attractive in China right now. Okay, and I'll leave it at that. So let's dive into some of these opportunities. Now, in terms of sectors, we spoke about how a lot of these sectors were overheating, and then in the past, I want to say 2 weeks, we spoke about XLK bouncing off the 38.2 fib, and then potentially heading up into the 61.8. We're not very far off from there now, just $5 off. So our SPX target of 5,300 is probably going to send us there at some point of time, right? And then with the energy, we saw a pretty nice rally in energy stocks. Last week, I gave you guys the XOM idea after it broke out of the 105 level, right? And it ended the week somewhere around 10. What was it? 109 around there. And I'm still long in XOM. I have a long position in this stock. So and I'm talking about the swing trade, obviously. And we took that on what was this date? Let's see. The 6th of March, right? You can see it here. I posted it on the Discord. 6th of March at XOM calls. This is where we were trading at. We were trading at 105, 10 something. It was, yeah. Okay, so we were trading at 106, right? And now we're at 109, 110. So we've had a nice move since then, and that trade will eventually pay out when the stock continues to move higher, right? So energy has been still pretty nice. We'll see if we break out in 93 range, and then that will continue. XLF, I spoke about financials last week, on the verge of breakout, and this moving into price discovery, right? And remember that this sector still has legs. If interest rates go down, remember financials will outperform. The market's pricing part of this already now, right? So having a good look at XLF and what opportunities you want to play within financials will be key in this process. Okay. Healthcare, not a preferred sector. I'm going to skip. Staples has been initially this. I was looking at a bearish opportunity in the sector, and this has been following market momentum to the upside. So we'll see where the pullback occurs with this one. Discretionary, this I have mentioned almost twice that I'm looking at potential bullish movement in this one, but the problem with this sector is Tesla and Amazon keep weighing down this sector. If Tesla was flying or Amazon was flying, both of them would pull this sector up severely because they make up a big portion of it, okay? And then there's materials, I'll skip this one, not that important. Industrials, he spoke about this, being bullish for multiple weeks. Communication, this is Meta. I mean, this is very heavily correlated to Meta. Real estate, we spoke about the potential breakout and continual upside. It's broken out of this downtrend right now, right? You had a high here, a lower high here, a lower high here, lower low, lower low, lower low. Now you're putting in a higher high, a higher low, and so there is a potential break of structure here to the upside now on real estate, which is likely to only be confirmed when the market gives the opportunity in terms of interest rate adjustments. Okay, so that's another sector that I'm looking at for potential bullishness. Utilities is the other one. Remember, we had a downtrend here, and we are still looking for a break above 64, 65, which you can add an alert around this level so that it breaks out. Now, I did read a report, and I don't know how far-fetched this is, but I read a report that the drive in AI is going to cause an increase in energy consumption in our time that is going to be really putting a big dent on these utility businesses. Do I want to go into the this entire sector and go and find who the biggest impacts are going to be on? Absolutely not. I do not want to waste my time that way, right? Because there are too many variables for utility businesses. Instead, I would just play the entire ETF, right? And that's just much easier. So this hasn't broken out into a bullish pattern confirmation. Therefore, I'm not bullish. It's simple as that, okay? But I will be, and there will be a thesis to support that when the time comes, okay? And then this is retail, which broke out and is forming a base at around 75. So this will be another sector that I'll be looking at for potential bullish rotations. Remember, you need to look at the market as a big bucket, and what are the buckets that are moving individually inside it. When you can figure that out, then you'll realize everything's so much more easier to look at, because you won't have themes that are working against each other, rather they'll be working together, right? Okay, now, semiconductors. Big sell-offs, big buybacks, too much manipulation, and for that reason, I stay out. I don't even want to touch this sector, okay? And your high beta names are still stuck in a limbo, so this one's something that I don't want to touch right now as well. And gold is breaking into all-time highs, continues to surge. Do I want to touch this? Absolutely not. I don't trade gold. It's not worth the risk. It's very volatile as a financial instrument, number one. Number two, doesn't give you much excess returns that are that amazing. So for that reason, I stay out from this. Okay, usual suspects, Tesla. Yesterday, I made a bullish call on Tesla, and I don't mind being wrong on this, but the 4-hour chart looks really nice. Okay, now hear me out. I know it's down today, yada yada. It got a price target reiteration by one of the I don't know who it was. Basically, some analysts said that, they're not going to grow. And I'm going to show you that I think that they're wrong. So let me pull that up real quick. I've spoken about this service that I used before, which has been actually quite nice. And let me share that with you guys. Hold on one second. Where is it? Here we go. So, for many of you who don't know, there is this service called Lightfolio. Now, obviously, it is a bit pricey, but I really like the data that they present, okay? So, they have called out bullish calls on Tesla 2 or 3 times before, and they have been right. But remember, their calls are not short-term, they are more long-term calls, and so far, it's the data that they present that is quite appealing. So let me run through it with you. You can see the street has turned against the EV giant, with some pondering if the company may lose money, right, at some point in 2022. And you can see the headlines, right? Tesla price cut by Morgan Stanley. Could Tesla lose money sometime this year, right? And the news starts to exaggerate these pieces of data, cherry-picking stuff, and talking about Tesla's, breakdown or whatever, right? Shares of the company are down nearly 30% year to date, right? But Tesla Q4 earnings missed Wall Street expectations, and the company projected slower automotive sales growth for 2024, leading to a significant 12% drop in the stock price, worst single-digit performance in a year. Despite Tesla's ongoing efforts to ramp up production, such as the Cybertruck launch, increased costs and vague future sales guidance have resulted in lower analyst price targets and concerns over future profitability and market performance. On top of that, you have very big competition from other vehicle makers, which we were expecting to begin with, right? But here's the thing. Here's where I'm at with Tesla in terms of a fundamental business, okay? I think that the market's expectation was here, Tesla's realistic expectation was here, and now the market is adjusting to a mean that is here. So I think the market is reverting to a mean in the middle, whereas the market's expectation was too stretched in the past, and Tesla's own expectation was too low to begin with. So I think that a little bit of normality is happening here. Now look at the data. Tesla is playing the long game. Tesla's price cuts have wounded the competition. Ford appears to be taking a page from Tesla's book, slashing the price of its Mustang by more than 8K to drum up demand, because its sales dropped significantly in January. This places the cost of vehicles around 48K. Tesla's comparable vehicle, the Model Y, starts at 42K and qualifies for the tax credits federally that the Mach-E does not, due to the reliance on Chinese suppliers. And Tesla continues to captivate consumer interest. Mentions and buzz is up 5% on the website visits and have increased even larger clip, which is 19% year over year. Think about that for a second. Why would people be, now if more people are visiting the website year over year by 19%, this greatly contrasts with other major players like Ford with declining traffic and buzz, and these are both positive indicators of future demand, especially happiness. Now remember something, Tesla does not market its product any other way except for you can only purchase its stuff from an in-store or online, right? You place an order online, it's like buying a tech product, right? So across the board with its competitors, it has better visits and mentions. The Cybertruck is generating significant buzz, and the tweets look positive, right? There's somebody posted one metallic red wrap, right? This is pretty sick, to be honest. I like the color of it. Users are putting the truck to the test, and it's not even closed. There's videos of it, right? So bottom line, the company hasn't proven it can produce the highest cost. It has proven that it can produce highest quality vehicles when it comes to comfort and performance. But even if EV demand may be cooling as gas prices are forced lower during election season, we actually see Tesla as a big winner when it comes to vehicle manufacturing, not just EVs. So this is the reason why this is one of their favorite long positions. So obviously they are biased in telling you this, but my point is, I think that when the media is telling you to do one thing and analysts are telling you to do one thing, it's very you need to have some balls to go the opposite move, okay? And I think that you know, even if this trade goes wrong for the short term, I'm okay with that. I'm taking a risk that I'm well defined, and the short term 4-hour chart here looks nice with a pin bar move, even though the gap down happened because of bullshit analysts downgrade today. We'll see if intraday we can see a squeeze to the upside. Okay, so that's where I'm at with Tesla. Okay, MSTR, Karina, let me have a look at that. Now I know MSTR is a Bitcoin stock, so and I think, may I know in what context are you asking me this? Because this just looks like a 90-degree angle chart, and I think majority of you that attend this live stream know my opinion about things like this, right? If you're buying or selling here, I mean I don't know what else to tell you. Like, there is no structure in this trade, right? There is no structure. Like, you don't have any lower high, lower low, nothing. It's just either straight up further or slam down every other day. So you can't trade this. Like, stop. My advice to you is things that move like this are not tradable. If you're talking about investment, long-term investment, then we talk about something completely different. But my view here is, if you're trying to trade this, you're gambling. That's my view, okay? And I hope you don't feel offended, because this is not something that I would trade. Personally, as somebody who's been doing this professionally for a long time, when I see a chart like this, all I want to do is just skip, because there is no value here. What value are you going to get? Yes, there might be an upside to 2,000. There might be an upside to 4,000. Nobody knows. Nobody can tell you. Nobody has a crystal ball. But if you want me to maybe give you Fibonacci numbers or give you extension numbers, okay, I can give you that, but it's not even going to help you, because look at this move. It's disgusting, right? I mean, even if you were to do a Fibonacci extension from the bottom of this all the way to the top here, then that would give you your 61.8 extension at 2,045. And the support becomes 1766. You just broke out of the 23.6 extension at 1591 right now, and you're moving higher here, right? So there's, in my opinion, this doesn't have any attractive risk-reward ratio upside. It doesn't have any attractive risk-reward ratio downside. It's just trading in a very, very different scenario. So I personally wouldn't trade it, okay? Just putting it out there. So as I said, if you're looking at the 61.8 extension, that's 2,045 based on this current wave structure. And yeah, so that's all I have for you guys in terms of macro and all that. MSTR has a gap all the way back to 2,000. Yeah, maybe. I mean, I wouldn't doubt it, right? This thing has like, I mean, technically has a gap all the way to what, 3,000 to 300, right? This thing went nuts at that time, and you know, starting to go nuts again. I don't like trading this. It's not something that is my bread and butter. I don't like once in a lifetime moves. I don't focus on those. Yes, it can make you good money, but I'm more of a person that focuses on my bread and butter. I want consistent moves, 20%, 30% profits in terms of the derivatives, or equity market should be, you know, a 5% move, 6% move. I'm more into those kinds of slow and steady movements than these, which are, you know, freaking, what, 8 times, 8x in 1-2 months, or 6 months, I don't know. Yeah. So, not my cup of tea, unfortunately. Okay, so Tesla was the main one I wanted to go through. Just a couple updates very quickly. Apple, I wouldn't buy the dip here just yet, with NASDAQ's thesis that we spoke about earlier. Domino's Pizza, spoke about this one for a potential ER run-up, right? ER is going to be posted on the 25th of April. Wait, yeah. So we have some time to take this trade. Not now. We can play this maybe in about 1 or 2 weeks, but I'm watching it very closely. It broke structure and is starting to form a potential base above this level here. So I will be looking for a potential long entry on this in the due time. Okay, if it can find support, obviously. Disney, the mouse has potential upside if it can break this 115. Next up will be 118. Then will be 126 after that. So I'll be watching Disney. Synchrony Financial, we spoke about this last week, right? Told you guys it was going to break out and go into this movement to the upside. It did break out at 42. Now, what are we waiting for here? Did I go long? No. Why? Because you don't need to. You don't need to chase this move to the upside. All you got to do is wait for the pullback. right? Wait for the pullback, wait for a red day, bounce on 42 or 41 gives you your entry here. Okay, so we'll be continually watching this. Micron briefly went into price discovery and then got smacked down. So this was a fake out, right? Did I play this long? No, because I always like to wait. And I told you guys, I'm avoiding semiconductors right now strategically because it's too overcrowded of a trade. And when there's overcrowding, there's manipulation, right? So I avoid it. The sectors that everyone's looking at, I will never play them. I always play other sectors where no one's looking at. And, you know, things like Tesla that has a mind of its own is what I like to play, right? XOM, we spoke about this one. We traded at our 106. It's currently at 109. Definitely a potential move at 110. Above that will be 113. So we'll see how far it can stretch. Coinbase, this is another one I won't touch for the time being, right? Mickey D's 1 hour style pennant, which has not yet seen confirmation, right? Mickey D's. We'll see how this one plays out in the next couple of weeks. And then, yeah, that's all. I mean, there's not... Oh, and Square. Yes, Square. Square, I don't want to touch the upside, but I will see if it can give me a rejection within the 88. Even so, then, I wouldn't want to play aggressive downside. I rather would take this to the upside because of the long-term chart on this. And then you have AMD, which... Once again, people definitely got sucker punched into this, right? Look at this, a huge, massive trap at 226, 230. And now starting to come back, pull back with very massive manipulation, right? It's the reason I've not been playing semis, right? It's just too overcrowded. And Google is a nice one, right? The 4-hour chart of Google looks really nice. If this is another potential bottom, then this run on Google is going to be even higher, right? It will get higher than 152. So, but the reason why I haven't entered long on Google is because we don't have confirmation yet, right? If you look at this 1 hour chart, technically it could still get rejected here because this is a downward trend line. So we want to wait for just not only that, we want to wait for a breakout, and then from here where it's currently breaking out, right? So Google's this will be a good trade for today potentially, right? Upside. If market momentum is strong today, I would look to take some Google 142 calls for an intraday trade, right? That could be a potential move. And yeah, that's all I have for you guys. I hope you have a good session. Sorry about Monday. There's too many things going on and I couldn't do that. So, you know, all in all, you know, when I'm here and I'm giving it 100% when I'm here. So I don't like to put out slipshod work. You guys know my style. I don't do something unless I can give 100% to it. So that's all the updates I have for you. I hope you guys are doing well. Make sure you leave a like behind on the video if you can. I appreciate that. And yeah, we'll see you back on Monday. Some of these coins are still trading quite nicely in the crypto world. So I'll give you guys more updates as I go along. All right, take care, and I'll see y'all on the next one. Peace out, guys.